Ladies and gentlemen, welcome back to the channel. At the time of recording this video, Tesla's stock is up about 4%, and Tesla was really an outperformer all day today. See, the market started off strong, a lot of stocks were doing well, and then you faded midday, kind of came back a bit towards the end of the day, but the whole time Tesla remained strong. What's going on today? What is all of the good news today for Tesla? There's a lot of it. We'll get into it here in today's episode. But the big story from a broader market perspective is the government shutdown, and it looks like things are headed in the right direction, but there's still one big uncertainty for this market that can be impactful to Tesla's stock as well. We'll get into all of that and much more, ladies and gentlemen. We have a lot to get into in today's episode. Do me a quick favor and hit that like button, as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys want to come join the trading community. But with that said, let's get started. In the news today, Elon Musk says, quote, "My companies are surprisingly in some ways trending towards convergence," suggesting that Tesla, XAI, SpaceX are probably going to be heavily linked in the future. Now, Tesla looks to have started construction on its new Optimus production facility at Giga, Texas, where Elon said there would be an annual production capacity of 10 million Optimus robots. Morgan Stanley's Adam Jonas on the Tesla shareholder XAI investment vote says, quote, "They're going to have to revisit this. We don't think investors understand just how important XAI is to Tesla and the broader Musk economy. Tesla's relationship with XAI financially and strategically is deterministic to the long-term success of Tesla, due in part to the natural synergies of data, software, hardware, and manufacturing in recursive loops. The values and value systems of both Tesla and XAI are endowed by the values of their shared creator. We believe this co-determination becomes more obvious in the next phases of physical AI/autonomy for Tesla in the year ahead." Now, in a little bit of bad news today, you can't have the rainbow without the thunderstorm. The Model Y program manager, Emmanuel Lamechia, has announced that he is leaving Tesla after 8 years with the company, saying, quote unquote, "Leading the all-new Model Y launch was the highlight, converting all 4 factories across 3 continents in just 2 weeks, something that had never been done before in the auto industry. Tesla taught me how to move fast without breaking things and how to scale from prototypes to millions of units. Excited for what's next. More to share soon." Tesla China is rolling out the Model Y L V2L adapter, and it's free for early owners. The Model 3 standard deliveries have officially begun in the US. Keep in mind, most people say this is more of a fleet vehicle. This is not something a lot of, Tesla enthusiasts necessarily are going to buy, because just for a little bit more, you can get the better features. But this is more like a fleet vehicle. Robin Denholm, in a new letter to shareholders, says, quote, "We are on the cusp of what could be the largest value creation event in Tesla's history, and quite possibly in the history of humanity. You chose ambition. You chose to see what is possible. You looked past the noise and reaffirmed your belief in a trailblazer who has turned Tesla into one of the most valuable companies in history, and who continues to push humanity closer to a future of sustainable abundance for all. The board could not be more excited for what is to come next. And as Elon also said on Thursday, this is not a new chapter for Tesla, but a whole new book. The age of autonomy is no longer approaching, it is here. With transformative technologies such as robotaxi and Optimus, we are bringing AI into the physical world." Now, if we take a look at what the short sellers are doing today, shorting about 1 million shares, psychopaths is what I call them, okay? You got to be a little crazy to be shorting Tesla here, as Elon's compensation package has been approved, and it looks like here she blows to the upside in this market soon. We'll discuss in just a few moments what the holdup is, why this market is just not going parabolic. Again, Tesla was a real leader today, but I do think there's one more big thing that needs to happen. Once it happens, you're going to see some pretty massive upside in this market. Nonetheless, you got about 2.5% short interest of free float. That is down from about 3% recently. Still a sizable short position, about 72 million shares sold short, and about $31 billion worth that is still sold short in Tesla. Now, the option activity today from hedge funds and institutions, you're looking at 130 different trades totaling $72.6 million with a positive order value of 61%. So there's, it's kind of a slower day as far as options, but this is only hedge funds and institutions and large trades, like anywhere from $50,000 to $100+ million. These are the trades that get flagged. They're not flagging if you buy 5 options, okay? These are large trades most of the time from hedge funds and institutions. So slower day as far as options, not super surprising with the uncertainty that is still facing this market, but it's still positive. Now, in the news today, the Trump administration has suspended a probe into China's shipbuilding industry, prompting Beijing to reciprocate by shelving its own investigation and putting off special port fees for U.S. vessels, per Bloomberg. So looks like, things might be headed in the right direction for U.S.-China relations. In the news today, the government shutdown. The House will vote on the Senate deal as soon as possible, Speaker Johnson says. House Speaker Mike Johnson called for the House members to travel to Washington, D.C. so they can vote as soon as possible on a Senate deal that would end the longest U.S. government shutdown in history. Johnson spoke to reporters a day after the Senate narrowly approved the first stage of the deal to reopen the government for the first time since October 1st. To end the government shutdown, the House needs to pass any deal that survives Senate votes. President Donald Trump would then have to sign it into law. Johnson indicated to reporters that he expected votes in the House to occur this week, but he did not state a specific day. He later told a Republican House conference during a call that he would like the vote to occur on Wednesday, although that is contingent on the Senate voting for it completely by then, according to a person familiar with the situation. The Speaker said he would issue an official 36-hour notice before the House votes. Johnson said, quote, "There'll be long days and long nights here for the foreseeable future to make up for all this lost time that was imposed upon us." Johnson has kept the House out of session since it passed a continuing resolution in September to fund the government through mid-November. Senate Majority Leader John Thune, speaking on the Senate floor Monday morning, urged his colleagues to vote as soon as Monday to send the deal to the House. Quote, "Let's not pointlessly drag this bill out," Thune said. "Let's get it done, get it over to the House so that we can get this government open." Saying, quote, "I am grateful that the end is in sight. I would encourage every member of this body, Democrat or Republican, pro-bill or anti-bill, not to stand in the way of being able to deliver the coming relief quickly." Quote, "The American people have suffered for long enough. But any one senator can delay voting on the bill for days with procedural hurdles. But a vote can be held quickly if the entire Senate agrees that it should happen." Now, the Senate deal would fund the government through the end of January, reverse all shutdown-related layoffs of federal employees, and guarantee that all federal workers will be paid their normal salaries during the shutdown. The deal also includes provisions for a bipartisan budget process and prevents the White House from using continuing resolutions to fund the government. CRs have been repeatedly used to avoid government shutdown, but are controversial because they frequently avoid lawmakers having to make decisions about long-term funding of the government that a normal budget would resolve. The deal would also fund through September the SNAP program, which helps feed 42 million Americans through food stamps. And you can see in your broader markets today, the Dow is up 0.88%, S&P up 1.62%, NASDAQ up 2.32%, Russell 2000 up 1.43%. So the NASDAQ is really leading here today, but it was weird. The markets opened pretty strong, and then you kind of sold off throughout the day, and then you kind of rallied back into the end of the day today. And there's a big reason for this, and we've been talking about it on the channel for quite a few days now. And the reason for this is simple. One, the government is not technically open yet. Now, the shutdown looks to be in sight, and markets price things in ahead of time. That's fine, okay? I was expecting a day or two of a rally once the government reopens. But after that, it's about where is the economy at, okay? If the economy is worse than expected, stocks are going to continue to sell off, right? It's going to be a rough market. If the economy's better than feared, then that's where you get this year-end rally. So even when the government gets reopened, we still have zero clarity on what's happening in the economy. And that's the real question, whether or not we have a year-end rally or not. Now, we are going to be getting some economic data coming out this week if the government shutdown is indeed resolved this week, okay? So we do get the ADP employment change weekly coming out Tuesday at 9:15 in the morning. You have the NFIB Business Optimism Index tomorrow as well. Wednesday, you just get some Fed speakers, Fed Moran, Fed Bostic, Fed Williams, Fed Paulson, Fed Waller. Thursday is when you start to get more economic data. You will get the core CPI, so inflation numbers, month over month and year over year, and initial jobless claims, a bunch of them, okay, if the government does actually reopen, okay? So Thursday could be a big day. Friday, you're going to be getting retail sales, PPI, okay? Now, retail sales is going to be really important because that's going to give you a much clearer picture of, how is the economy doing besides just company earnings, which I believe company earnings are better than any BLS data we could get. And company earnings have given us a green light that this economy, while it's not great, is not recessionary at the same time. Okay, that's my opinion. That's my perspective. And the markets don't have that opinion or don't have that perspective. The markets think we are near a recession right now. Hence why small caps and AI and the risk on trade has sold off so much in the last 5 weeks. I personally believe we're going to get this government opened at some point this week. And then we're going to get this economic data that's going to show, oh my gosh, the situation's not as bad as we thought. See, on Friday, the expectation was negative 60,000 jobs. So, to get the markets to continue to crash, you need to see the jobs report worse than that. If it's better than that, it could be negative 50,000 jobs. That's still bad, but that would be better than feared or better than expected, okay? So I think the bar is really low. And although I don't think we're going to have 100,000 positive jobs for last month's jobs report, I don't think it's going to be negative 60, 70, 80, 100,000 jobs, right? I think that's way too negative. And that's why stocks have sold off, because people thought we were going to have negative 60,000 jobs. Here's the deal. We should be getting the jobs numbers a couple days after the government reopens. So if the government reopens on Monday, today, tonight, tomorrow, we're going to be getting those numbers by the end of this week. Even if the government opens on Wednesday, we might get the jobs report that we were supposed to get on Friday this week. If it's Thursday or Friday, we might not get the jobs report until Monday. And that's what I think really sets this market up for a year-end rally, is the better than expected jobs report that is coming. Now, if CPI comes in low on Friday, which if the government reopens on Thursday, we should get that data, okay? Then that also is an upside catalyst, a big one at that, for this market. But just to put this into English again, okay? We need to get the government open. That's good. You stop some of the unnecessary economic harm. That is good. That, I think that gives you a day or two of a strong market, maybe another day or so. I wouldn't be shocked by that, okay? But it's not going to give you the year-end rally. You need the economic data to show us the economy is not in a recession. If the economy is in a recession or worse than we already think it is, which, again, I think is difficult, okay? I think it's highly unlikely. But if it's worse than expected, you're going to see a larger crash. You're going to see more rate cuts from the Fed. You're going to see more stimulative measures, okay? But if it's better than expected, maybe CPI and some of your other data determines the path ahead for the Fed. But if the economy is better than expected, that gives the green light for stocks into the end of this year. Now, also in the news, Donald Trump has started to throw out the idea of a 50-year mortgage in the last couple of days. The idea is, if you look at a 30-year mortgage versus a 50-year mortgage, the payment should be maybe 35% cheaper, which allows people to get into homes easier. White House senior advisor Hassett on the 50-year mortgage says that he supports Trump's idea. Trump says payback numbers in tariff revenue and investments would be in excess of $2 trillion. Trump says a national security catastrophe if we pay back the numbers that are realized. And Thune says it is unclear if we can vote today, which would be, I believe, the House, Senate, who cares, okay? Markets just know the government is about to end the shutdown soon. The CNN Fear and Greed Index today is coming in at 32, which is still not even to the midpoint of fear. So this market is still pretty bearish. You know, people are not convinced that this is the start of a larger rally. I mean, look at the comment section of this video. You're probably going to see quite a few bears out there, okay? Which is a very bullish contrarian indicator. When the CNN Fear and Greed Index is this bearish, you typically want to be buying stocks, okay? And I think this time is no different. Now, market momentum is greed. Really, that's because of the Mag 7. The Mag 7 are leading this market today. In fact, midpoint today, out of the S&P 500, over 320 S&P 500 stocks were in the red. 200 and like whatever, 70, 30, 50, 2 something were in the green. That's it. So a majority of this market was actually declining today. So some of the outsized gains you see in like the NASDAQ are really just coming from the Mag 7. Tesla, Nvidia, you get the idea. Now, stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral and safe haven demand in greed, and junk bond demand currently in extreme fear. We can see the probability for a rate cut coming in December is 57.8%, and the odds of a pause at 42.2%. So these odds are going to go back and forth, but it's about 50-50 right now. And it'll be interesting to see what happens, because I think the economy is going to show it's not as bad as feared, but I also think CPI this Friday is going to come in better than expected. So how does that kind of push and pull on the odds of a rate cut? We'll have to see. The percent of stocks trading above their 50-day moving average today coming in at 42.22%, which is up 11.22% today. About almost 4.5% of stocks are breaking above their 50-day moving average today. So this is a pretty strong breath thrust for this market, which is a good sign. Again, at the end of the day, you have to get the government open, number one, which looks like that's going to be coming soon. And number two, we need to see the economy as better than feared. If the economy is as bad as Wall Street thinks, like, I would be shocked if stocks can do well into the end of this year. We were expecting negative 60,000 jobs. That is pretty damn recessionary last I checked. And you're not going to have a strong market with those kind of numbers. It will prompt the Fed to cut rates, but that doesn't matter if you're heading into a recession anyways. Now, last but not least, we do have some earnings today and after hours with Rigetti, CoreWeave, Big Bear AI, Rocket Lab, AST, TeraWolf, Plug, Oxy, Microvast, and some others. Throughout this week, you're going to have more of your AI names, your, inference names, Nebius, again, Tuesday pre-market, CoreWeave today and after hours. You're going to have Beyond Me, Oklo, and some others tomorrow as well. Wednesday, Circle, Arcos Dorados, and after hours, Cisco. Thursday, pre-market, Walt Disney, Bitfarms, JD.com, Billy Buy, PaySafe, Gambling.com. And then after hours on Thursday, you have Red Cat, Applied Materials, New, and some others like Virgin Galactic. So we have a lot of smaller cap companies over the next month or so that are going to be reporting earnings, and a lot of your AI trade. So keep that in mind if you are invested in those areas. As said, ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you have not done so already. Come join us, link down below in the description of this video for the trading community, okay? We are going out to find the next big winners in AI. We actually bought a brand new one today that is pretty damn exciting. They have a partnership with IBM. They're they're doing a lot of cool things. Okay, just the way they run that company is pretty unique. So yeah, come join us, come see the stocks we are investing in, come get involved in the community. See, AI is not a bubble right now. AI is not something that's going to be gone in 3 months. AI is going to be around for decades. And we are positioning today in the stocks that we think are going to be 10, 20, 30, 50, 100x winners over the next 1 to 3 years, right? These are under the radar stocks that Wall Street is ignoring, likely because they're just so small. A lot of Wall Street firms can't even invest in those really small companies to begin with. So yeah, that's where I think the best risk reward is in this market right now. So that is it, ladies and gentlemen. Have a great rest of your day, and I will see you in the next one.